Hello, this is Vince Lancy and the Goldfix Hartnett Flow Show walkthrough. Very light report this week. We will go through that in short order in a minute, as well as a couple of other reports on gold, equities, and oil. But before we do that, a little quick housekeeping. Next week, I will be personally on vacation. There'll be no morning market rundown as a result of that. I have not personally had one in over 2 years, so it's long overdue. There will be reports going out during the week, but not as active in the writing, but you will not be disappointed with the content that you do receive. Today we're going to go through the Hartnett, end of housekeeping. Today we'll go through the Hartnett report in short order. And then I want to touch on a couple of other reports. One of them is the Goldman trader who made a comment about the China selling. We wanted to put a fine point on what was sold, why it was sold, and how it was sold. And I think that will, there's been some conversation that people think China's selling physical. That's not the case, and we'll go through that in a second. We're also going to have a quick equity comment as dovetailing between what Hartnett said in his report this week and what one of his other division managers said. And finally, a quick oil observation. We'll be touching on some gamma concepts as well in the equity section. So here we go. Right to the Hartnett section. Again, it's short. Hartnett's weekly report is presented two ways: video walkthrough with commentary. Hartnett's main points are broken out below on the right, and new subscribers are encouraged to listen for translation of Michael's particular brand of lingo and the Goldfix nuanced take of his excellent analysis. Enjoy. There really isn't much excellent analysis this week. I mean, it's good, of course, but he might be on vacation. So let's go through it. On the right-hand side, you have the our write-up of the report, complete with contiguous pictures. On the left-hand side, you have his actual report. So let's start. After reading this through, Hartnett's key points are essentially equity-based. He believes the market is pricing the second 100 days, or Trump's pivot. He notes that despite the soft data, the intra-month data, the hard data keeps coming in firm. And mind you, this was put out before the payrolls came out on Friday. So he seems to be right in that respect. And he notes the steepening yield curve, the strong financials, and lower oil as reasons to not be short stocks anymore. That's what he's really saying here, to not be short stocks anymore. But he's not saying it. We're going to say it for him. Okay, so here we go. Scores on the doors. Gold is up 22%. Government bonds are 6.6%. Investment grade bonds are 4.9%. High yields are 2.9%. Cash is 1.4%. Stocks are minus 0.3%. Commodities are minus 5.3%. US dollar is minus 7.6%. Oil is minus 18.9%. Crypto is minus 25.9% year to date. Tail of the tape. Trump's first 100 days gave us gold up 21%. That's the best start since Ford. The S&P 500 down 7%. That's the worst start since Ford. The US dollar down 9%. That's the worst start since Nixon. The price action for this time period was driven by DeepSeek, Doge, NATO, and Liberation Day. So if you put those three together, you have DeepSeek, which is China attacking our exclusivity in technology, showing that it may and can be done cheaper. That hurt our valuations. Doge, which puts, even though it's the right thing for the budgets and deficits, puts recessionary pressure on unemployment. NATO, although I'm not really sure how NATO directly is involved, but certainly, I don't know. So I have to think about that. And Liberation Day, which is probably obvious. The tariffs have been the big driver in this market. Next, he says, the price action is now unwinding significantly as investors anticipate Trump policy pivot in the second 100 days to lower tariffs, lower rates, lower taxes. Okay. This is basically the first point that I made for Hartnett's key points. Let me scroll this down for you. All right. If your eyes are as bad as mine. He's basically saying that the market seems to be ignoring the macro data, his title, Soft Macro Meets Microsoft, unwinding the reasons for the sell-off in the first quarter, as previously mentioned, and looking forward to an increased potentiality for Trump to pivot, another executive pivot where he backs off on tariffs, backs off on rates. Well, he can't back off on rates literally, but rates can back off based on his actions. And lower taxes. That's something he can do. So let's talk about that for a quick second. We have been saying, I think for the last 3 months, that based on Scott Bessent's analysis before he was Secretary of the Treasury, that if Trump wants to execute on his Make America Great Again plan, which is essentially increase manufacturing and change or reset the whole economy from a services economy to a manufacturing one, he needs to do certain things. And those things will take time and cost money. And while those things take time and cost money, he's going to have to show progress in those things, like the things that he has going on right now that aren't showing progress yet. You know, they may happen all at once, but there's no appreciable progress yet. Not that anyone thought there would be. So during that time frame, as a simultaneously or coincident with these things that he's working on, you know, get people fired at the government level, that's DOGE, right? Get more spending approved so he can build manufacturing, right? That's stuff that's being worked on, right? And the third thing would be to lower taxes. Those three things would be very, those are the things that we need done to get manufacturing back. But along the way, they would be extremely helped by a weaker dollar, right? Lower oil, and a good popularity rating for Trump. So what was in the first 100 days, I'm going to get good deals and we're going to build manufacturing, right? Becomes, this is how it works in government all the time if they can't get something done, becomes, well, then I'm just going to push for lower rates, push for a weaker dollar, and reduce taxes. And those are the things that are supposed to help the plan. Now, it's not to say he's abandoning the plan. It's to say that if the plan runs into difficulty, then he's going to have to do a little bit more, get a little bit more help. And the oil price may have done everything it can in terms of help. However, the weaker dollar may have a lot more to drop, but right now maybe it's done all it can do right now. And the third thing would be printing money, of which right now monetarily he has no control over. You know, but there are things that he can do, and I believe Scott Bessent's doing something like that. I believe Scott Bessent is going to, again, monetize assets to the extent that he can and use that money to be spent fiscally. So do things at the Treasury level on the fiscal side that the Fed doesn't do. Lowering taxes is one of those as well. Anyway, if you can't get any of your plan A ideas to work, you go to plan B. Plan B is get the dollar to zero, get taxes to zero, and do everything you can to negotiate for lower oil price. Now, I'm not going to get into if Trump's going to succeed or not, but I'm going to say all the things Trump is doing make sense. And the way he's doing it, even strategically, makes sense. Meaning, lower oil prices may help China, but it also hurts Russia. It hurts every country that produces oil. And lower oil prices allows him to have a better negotiating position. So the Saudis, he probably has already cut a side deal with them. They're very important to anything